Welcome, everyone. We're so glad you can join us for this live webinar hosted by JFL Total Wealth Management to address the importance of long-term care planning. This is a section of financial planning that often gets overlooked until it's too late. A lack of long-term care planning is something that not only affects you, it can have an incredible impact emotionally and financially on your spouse and children. Today, JFL's Jerry Lynch and Greg Bushwell, the founder of the Long-Term Care Specialist Group, will go over the who, what, why, how, and how much of long-term care. Our goal is to provide you with the basics so you can follow up with a more in-depth conversation about your individual medical and financial situations. We encourage you to take notes during the presentation and send in questions through the questions feature on the webinar panel. We'll answer as many as possible. If we run out of time and did not address your specific question, we'll follow up with you directly. A recording of this video and the presentation will be posted on the JFL website in a few days as well. Without further ado, let's introduce today's panelists. We have Jerry Lynch, who's a certified financial planner and founder of JFL Total Wealth Management. He has been the financial advisor for 23 years and has been working in the financial industry for more than 30. Greg Bushwell is a seasoned insurance professional specializing in long-term care planning for the last 25 years. As one of the founders of the Long-Term Care Specialist Group, Greg works to protect families and the assets they have worked hard to accumulate. Welcome, guys.
Hello, everybody.
All right, so before we get started, we wanted to do a quick quiz just to see how much you already know about long-term care. So the question we're asking here is, which one of these following types of insurance typically cover long-term care services? Is it health insurance, disability insurance, the Medicare, Medicaid supplement, or none of the above? So if you guys want to quickly put in your vote of which one you think it is, and we'll see how everybody did. Answered D, none of the above, which actually a lot of you did. 83% of you voted that you were correct. So I think we're going to now move on to the rest of our presentation. So Jerry, do you want to take it away?
Sure. Part of what we do, again, I consider our firm to be very good generalists. What we do is we try to take a look at the entire picture. We take a look at taxes, real estate, investments, estate planning, all the different areas of your life. And parts of those areas get incredibly complicated. So as you know, we work with tax attorneys, we work with CPAs, we work with investment professionals, all different types of people. I met Greg about 20 years ago, and he's been very beneficial in our relationship with what we help you with, because again, once we started doing this, there was over 100 different carriers who are out there. Now there's probably less than 10. It's a very complicated business. So we're going to talk about a couple things today. I want to take a moment to talk about what is long-term care. And it's not necessarily about buying an insurance policy. The second thing is, what are the planning options that you need to be thinking about today? Third, why do you need a plan? This is going to impact more than 50% of you, and you need to get ahead of this so that you have an option to basically coordinate your care in the future. What are the alternative coverages and basically some of the statistics that are associated with long-term care? And finally, what are the costs associated with long-term care? Now, I mentioned before, Greg has been very beneficial to me and my family. He's taken care of a policy for my mom. I have personally policy. People in my office have policies as well too. I think if you're going to live long enough, you need to understand that reasonably you're going to need a level of care at some point. And you need to make sure that you get out ahead of this so that you are not basically making your family get involved with something that you should be doing yourself. So that being said, Greg, why don't you talk a little bit about what is long-term care and how you can make everybody's life a little bit easier here.
Okay. Thank you, everybody, for joining us here today, and I want to thank Jerry and Gretchen for giving me the opportunity to share some ideas on a topic that I feel very passionate about. Two reasons I'm very passionate about it. One is it's the profession that I chose, but second and most important is I am living this long-term care nightmare today with my two elderly parents, and I can sit here and tell you that if it was not for the planning that my family did years and years ago, my family would be in total disarray today. And that's the reason we're talking about long-term care planning. Before we get into what long-term care is, I believe it's important to eliminate some of the misconceptions. And I was happy to see that 83% of you that answered the question that Gretchen just asked a few minutes ago believed that your normal health insurance policy and the government programs and Medicare and Medicaid is not a viable option when it comes to long-term care planning. Very, very important to understand that. Though most people think it's an elderly person lying in a nursing home bed. That's what it used to be years ago. But the planning process has evolved so much into much more in-depth type of planning. Now, let me ask, we also want to talk about the reasons that we plan. But before I do, I want to ask each and every one of you, you don't have to answer it, but just to yourselves, have any of you have a long-term care plan today? There's 30 some of us on this call today. I'm going to say that maybe 3 or 4 people have a plan that they've already taken care of. But in essence, just think about it. Each and every one of us do have a plan today. If we didn't transfer the risk already, something like Jerry, Mom, my parents, myself have already done, we have what is known as the United States by default plan. That means that if something were to happen to you last night watching the Monday Night Football game, you're okay putting that burden on your loved one. You're okay taking $100 out of your retirement account. You're okay relying on friends and family to render service to you. Our overall objective today is to empower you with some ideas to have that difficult situation with each other and discuss amongst yourselves what is a better cost-efficient way to plan in the event of a long-term care situation arises. Reasons we plan: one is the burden on the family, as Jerry alluded to. Second is asset preservation, freedom of choice, living with independence and dignity, peace of mind. We all want to have some form of peace of mind, and aversion to welfare. You guys all work with Jerry today to create estates. We do long-term care planning to not only keep the family intact, but to keep your retirement intact, so that will perform to the main intention was designed, retirement. As I stated earlier, I am living that nightmare, and I'd be hard-fetched to believe that not 1 or 2 or maybe all of you out there on this call have had or currently are living in this long-term care situation. And it's a big, big burdensome task to fall upon. So today we're not talking about long-term care insurance, but we're talking about long-term care planning. And the question is, who will take care of you in the event that you live a long life, but rather what the consequences would be to your loved one and your retirement portfolio if and when a long-term care situation does arise. So if you truly think about it, outside of market volatility, the only thing that can truly involuntarily compromise everything that you work so hard for and could cause an irreversible consequence to your family is a long-term care situation. So what is long-term care? Long-term care, it's not a place, it's not a thing. It's a proactive plan to develop to protect your family, your assets, and your lifestyle from the high costs associated with long-term care. So think about that. It's proactively creating a plan to protect your family, your lifestyle, and your assets from the high costs associated with long-term care. Sure, it's not a place, but what it does, it provides capital. So you could receive care in a nursing home, should you, in an assisted living facility, or care in the comfort of your own home. Help you with the things that we take for granted each and every day, such as bathing and dressing, eating, toileting, transferring, or continence. But the majority of care today, I'm going to say close to 60% of all claims are directly related to cognitive impairments such as Alzheimer's or dementia. And that's a big problem because no matter how good the advancement in medicine and technology is, nobody has yet to find a cure for dementia. And that's the problem that exists in the long-term care industry today. You know, if you think about it, should you consider long-term care? Well, if you think about it, you've already planned for some of these other risks, such as a house fire, and the chance for a risk for that is very low. How about automobile insurance? Before you drive off a lot, the government tells us you must have automobile insurance, and that risk is very moderate, as you can see. Down the bottom left, Hospitalization. That's a big talk in the government today as to how many people in America are not insured with health insurance. But if you look at the bottom right and all those red, what that is saying is that the majority, over 70% of people, once you reach age 65, are going to need some type of care before we leave this earth. And the astounding fact is that only 10 to 12% of the American public have even done any form of long-term care planning. Yet statistically, odds tell us that of all these risks, the long-term care is the largest, yet nobody's even having that conversation. And again, the objective of this short meeting is to empower you with some ideas so you will go back and discuss with your wife and your children and your accountant and your attorney, because you want to be able to transfer that risk, not to yourself, not to your loved ones, but i.e. to a third party. Why is planning so important? Again, because it's not just a financial aspect, it's the true impact that it has on your family. If you think about it, if you've seen somebody, very seldom does a long-term care situation bring a family together. Usually it tears them apart. And it's a very, very taxing emotional burden between a husband and a wife. And if one person is receiving care, the other person usually is going to do his or her best to take care of the spouse, and it's very taxing on them, and it could cause a very, very tough relationship between the two of them by rendering such services. A long-term care illness adversely impacts the relationship with family and friends. Usually when you have 4 or 5 kids in a family, there's only 1 or 2 kids that usually step up to the plate and are willing to offer such services. In a transient world today, we're here in North Jersey. What if your kids relocated to California or Florida, and they're not around to take care of mom and dad? And all of a sudden, one brother or sister is upset with another one, and eventually mom and dad passes away. All of a sudden, there's a big turmoil in the family, and that's what we're trying to to eliminate. We want the families to stay intact. We want your retirement account to stay intact. But worst case scenario, it gives you the peace of mind. 7 to 8 out of every 10 people are going to need some type of long-term care. Some statistics that we talk about. 10 points in the year 2018, the long-term care industry paid out $10.3 billion. That's with a B, $1 billion in long-term care to over 300,000 policyholders. 9.2 billion of the close to 300 policies in 2000 shows an increase of 12%. Every year that is growing and growing. Now, why is that so telling is because, remember what I just said, only 10 to 12% of the American public has done any long-term care planning. So imagine the other 90%. If the industry paid $10.3 billion, just imagine how many people used $100 dollars out of the retirement account or used the blood, sweat, and tears of a loved one to render such services. Now, again, majority of people think that long-term care only impacts the elderly, and it's an elderly person lying in a nursing bed having services rendered to them. That is the furthest thing from the truth, because as you can see here, 45% of the people that are accessing long-term care benefits throughout America are working Americans between the ages of 18 and 65. That's an astounding figure. So people say, it's never going to happen to me, or I'll wait 10, 15 years. Feel free to do that. But you know what? A long-term care event doesn't play favorites. And you need to ask yourself, I've been lucky so far. Will I continue to be lucky and I never need such services? Now, between a male and a female, we're seeing where the majority of care providers are females. We're seeing the daughters tending services to mom and dad. 70% of all the people in nursing homes are women. And on average, a woman needs about 2.5 years of care. A male is about 1.5 years. But in general, it's somewhere between 2.5 to 3 years is the average stay for somebody needing long-term care services. As I said before, 70% of caregivers are females. Yet, over a very short period of time, the care provider becomes in worse physical condition than the one actually receiving the care because it's so physically and emotionally burdensome to to render such services. So the importance of transferring that risk and keeping the family intact and keeping your retirement account intact is so, so important. Yeah, so some key statistics. Again, the average stay for somebody for long-term care is approximately 3 years. All depends on the type of services you need. If you had a stroke, you may live for 3 months. You may live for 3 years. But a good plan encompasses care in a nursing home, home health care, and assisted living facility. Again, the average stay is a little over 3 years, but it all depends on what condition you do have. Dementia. Someone that comes down with dementia, the average stay is anywhere between 6 to 8 years. So you need to take all these things into consideration. And again, the fact 69% of those turning 65 this year will need some type of long-term care during their lifetime.
So one of the most common things that people tell me is that it's not going to happen to me. And I just kind of throw this out. What does Superman, Ronald Reagan, Michael J. Fox, Muhammad Ali, and Glenn Campbell have in common? These were all people who needed long-term care, and Michael J. Fox will continue to need it for the rest of his life. These were accidents, such as Christopher Reed, dementia, Parkinson's, MS. These are just some of the things that can impact people that are tremendous athletes and are in very good physical shape. Again, the question that I always have is that generally what happens with these types of situations is one person in the family gets responsible for the care. And then generally what will happen is the other siblings will have their comments on what they need to be doing better to take care of mom or dad. And my point is that it's reasonable if you live long enough that you're going to need care, and that care could cost almost $350,000 a person. And if it's not costing you $350,000 a person, it's because somebody in your family is putting in $350,000 worth of sweat equity to basically help you through this type of situation. And the only point I would make right now is that if you're married, take a look at your spouse and say, could I lift up this individual right now? And if the answer is no, and my wife can't lift me up right now, it's very reasonable 20 years from now, she will not be able to do that. So again, when we do this planning, it's not just a matter of who pays for it, it's who coordinates the care, who could help me be in a position where I have a little bit more control over myself. Greg, take it away.
Yeah, you may be thinking out there, you may have had personal experiences, but the average monthly cost here in North Jersey for home health care ranges between $5,000 and $6,000. You're talking $60,000 a year, depending on the level of care you need. Assisted living facility is closer to $6,000 to $7,000, and the place where nobody wants to live is a nursing home. Somebody once described that to me as God's waiting room. That cost is anywhere from $10,000 to $12,000 on a monthly basis. You're talking well over $100,000 a year. And these costs are current costs, and they're only getting greater because of the cost of inflation. Now, it's going to vary from where you live in terms of if you decided you're going to relocate to Florida or Arizona, the cost may be a little bit less. But these are real current dollars. And without having a nest egg set aside $250,000, $300,000 earmarked specifically for long-term care services, you can compromise a large part of your overall portfolio. You know, what's covered and what's not? Well, a big comprehensive long-term care policy, a good comprehensive, covers everything. Covers everything, and it's fully portable. When I say covers everything, a nursing home, dementia care facility. Even though the nursing homes are very popular today, the amount of people in a nursing home compared to where they were yesteryear is very small, yet the cost continues to increase. Assisted living has become very popular over the last 10 or 15 years. Older long-term care policies never even had assisted living in them. Today, they're covered at 100%. Adult daycare has become very, very important because as we remember as a child, our parents would drop us off at daycare and they'd go to work. Today, it's the role reversal. We go to work and we drop mom or dad off at daycare. We pick them up at 6 o'clock at night, and a good policy covers adult daycare. And the last portion of a quality long-term care plan is home health care. That's where about 70 to 80% of all long-term care claims come from. They help you with your assistance of daily living. hospice if you need be. But the majority of people want to live in the comfort of their own home, sleep in their own bed, watch their own television, and it's a lot easier for loved ones to come in and check on you when you're receiving home health care. What does long-term care not cover? Very little. Very little. As long as it's a valid claim, again, the inability to do your activities of daily living or a cognitive impairment, it's going to cover. Now, some of the incidentals, such as getting, cable TV or getting your hair done, maybe some excess care, such as transportation or types of food that you're going to consume, those things are not covered in a long-term care policy. But again, when we're talking about quality long-term care companies, as Jerry alluded to earlier, there used to be over 100 companies. Today, there's only between 8 to 10 quality carriers. A good quality long-term care policy is comprehensive and fully portable. The ever-changing landscape of the long-term care, why do we say that? Is because if you think about it, life insurance has been around for a couple hundred years. Long-term care has only been around 40 to 50 years. And the actuaries, the insurance companies, the insurance producers are still trying to create plans that are cost efficient for you, not only benefit-wise, but price-wise. As we alluded to, fewer carriers in the industry, 8 to 10 carriers today. They've exited the market because they did not feel that it was going to be, they could make a profit, so they've exited the field. Unfortunately, traditional long-term care policies over the last 4 or 5 years have been impacted with premium increases. Not only small ones, but we've seen substantial ones. And that has left a bad taste not only in the insurance policyholders' mouth, but us as producers as well. And the last thing here is the new types of policies. Luckily, the industry is listening to people such as you, the policyholder, Joe Public, Jerry, and I, who happen to be policyholders. We're looking for better, more cost-efficient ways of transferring that risk. And they've created what is known as linked hybrid products that now come with a guaranteed premium. Policy options. As we said, traditional long-term care has been around 40 or 50 years. It's the most cost-efficient way of using your premium dollars to create the largest benefit for long-term care. As a business owner, the government gives the business owner the ability to use a corporate check on a deductible basis. And it's really the only insurance product in the industry that allows you to use premiums paid by the business on a deductible basis. Cons, maybe a negative of a traditional long-term care is kind of like a use it or lose it proposition, like your automobile insurance. Hopefully you never have an automobile accident, but if you do, the benefit's going to pay. Hopefully you never need long-term care services. You take your policy, put it over in your drawer, never need it. But 27 years from now, you do have an incident that requires services. You tell your children, open up that drawer, and there's a nest egg of money, $400,000, $500,000, $600,000. The premiums for traditional long-term care, as we alluded to earlier, are not guaranteed. The carrier reserves the right to increase the premium. And this is an insurance product that is underwritten, and it's got the strictest insurance underwriting for mortality, because they're looking for the morbidity in terms of if, in fact, you cannot perform your activities of daily living. The next type of option is a linked hybrid product, which has become very popular, as I said, over the last 10 years or so. It's a linked combination of a life insurance plan with a long-term care component. The beauty of this is you can pay your premium up in a short period of time, either a lump sum or over 10, 15, 20 years, whatever you're more comfortable with. The beauty of this, it's a guaranteed premium. The insurance company cannot come back to you and say, we want an 18% or 37% rate increase. The premium is fixed. Every feature in this particular type of policy is guaranteed. Builds up some cash value that you could use in the future. And there's a program out there with the government called the 1035 exchange, which allows you to use excess cash value from an old life insurance policy, and you put it into this type of plan that could either eliminate your premium totally or contribute to a good portion of that. The cons to this type of policy is it's a little more costly than a traditional long-term care plan. The third feature is a basic, what we call is a just straight term life insurance policy with a long-term care rider. It also provides the death benefit and a long-term care. So these two provisions is, people say, well, what if I never need this? Well, the beauty of this, if you live 25, 30 years and never needed long-term care services, with a traditional long-term care, the insurance company just eliminates your policy totally, and they win because they took all your money in terms of a premium. With these linked hybrid products, if you're blessed with living a long life and never needing long-term care services, even though the chance of that is small, the insurance company is going to turn around and pay your named beneficiary a tax-free death benefit. Some built-up cash values, and again, can use the 1035 money. Again, the con of this, just like the linked hybrid, is it's a little bit more expensive than what a traditional long-term care policy looks like. Alternatives for care coverage. What if one cannot qualify? And again, we mentioned that when it comes to this is an insurance product that the insurance company is either underwriting for mortality, life and death, or morbidity, the inability to do your activities of daily living. Some people the premium for a traditional policy might be a little too expensive. A pre-existing condition that one has that would prevent you from securing a long-term care policy. On the right here, it says, so what if somebody already has a dementia issue, or maybe some form of renal failure, kidney failure, Parkinson's disease? That's one of the impacts that my dad has right now. It's Parkinson's, and it's not a pleasant thing to experience. Alzheimer's, as I stated earlier, the industry has yet the medical field has yet to find a cure for Alzheimer's or paralysis. We talked about that slide with the athletes and the well-respected individuals such as Ronald Reagan. Paralysis, accidents do happen. We don't plan to become sick. We don't plan for accidents to happen. They do happen. And the problem with it is that if you haven't done the proper type of planning, you're compromise everything you worked hard for. So if you look at what some options are, alternative care is using your HSA. If you have excess money in your HSA, you can use that for premium dollars towards a long-term care policy, or use those dollars to pay for long-term care services on your own. Self-funding, a lot of people believe it's never going to happen to me. And I can sit here and tell you, I promise you, a long-term care situation will never happen to any one of you. Never happen to any one of you until it does. And until it does, and when it does happen, and if you've done the proper planning, you're going to be in pretty good financial shape. If you haven't done the planning, you've compromised everything that you worked hard for. The third thing is fixed annuities. Fixed annuities, you can transfer and repurpose some of the money using an annuity, and a portion of that annuity could be used to pay for long-term care services. And the last feature that we have is employer-sponsored plan. For those of you that are still currently employed, I would highly suggest that you get on the phone with your HR department and ask them, what type of long-term care plan are we offered through our employer? Usually, the plan is very small and basic, but it's very important that you do get on board with that, because that's the starting point. That's the springboard for you to start the conversation for long-term care, and then you can supplement it with something more comprehensive to make sure that everything is taken care of properly. What can you expect to pay? Before, we talked about the cost for long-term care is $5,000 to $6,000 for home health care, or $9,000 to $12,000 for facility care. Well, I will say that the average premium today ranges between $2,500 and $3,000. So that's $5,000 to $6,000 per couple, all depending upon your age, your health, your marital status, and the benefits that a plan encompasses. Here, if we take a $6,000 a month benefit, again, which is the average for home health care, and with a 4-year duration, what you're doing, you're creating a buck in money of $288,000. And before, we said that's today's dollars. We include an inflation rider, a 3% inflation rider, to keep pace with the ongoing cost of care. So if we take a 50-year-old married male today, his premium would be in the ballpark of $1,700. If we waited 10 years, that same premium is going to escalate to $3,000, and at age 65, it's going to be $4,500. Now, why is it going to be so much more? Is because in today's dollars, it's X. Because of inflation, if you waited 10 or 15 years, in order to keep pace with the cost of care, you're going to have to purchase more insurance at that time. So if you took that 50-year-old gentleman and he paid premiums for 30 years, he would have paid about $51,000 out of his pocket. But if you're saying, I'm going to wait 15 years, I'm going to wait to I'm more cost efficient. All right, so over a 15-year period, half the amount of time, you would have put in over $67,000. So there's no better time than today to do long-term care planning. And it makes sense to buy at a younger age when you don't need it, so it's there tomorrow when you do. You know, you need to purchase more benefit in the future. Like I said, what's the value of $6,000 18 years from now? The $6,000, you may need $8,200 a month. No guarantee that you will physically qualify. The younger you are, traditionally, the more healthy you are. The longer you wait, the greater the potential that you're going to come down with some health ailment. And there's no guarantee that the products will be available. As we said earlier, there used to be 100 companies that marketed long-term care. Today, there's only 8 or 10. What the future holds, we really do not know. But we do know that the best time to do something is today and take advantage of what the policies are offered.
Yeah, so one of the questions people always ask me is, all right, when's the best time to do this? And generally the best time to do this is in your 50s. The premiums are usually a little bit lower. We know that you're insurable, meaning that the insurance company is willing to take a risk on you. After age 60, the rates start going up at a very high level in a very short period of time. And the difference between somebody taking a policy at 60 versus 65 is generally about a third more expensive. The longer you wait, the greater chance of developing some type of medical situation. And one of the jokes we have in our office is if you come in here and you tell me you need insurance, the answer is you're uninsurable. The only time somebody needs insurance is when they have a condition where they come out of the doctor's office and the doctor says you have this type of condition. If you come up at that time and you say, I want to have insurance, they're going to basically say this is not an option for you because of your pre-existing condition. So you need to, again, if this is one of the options you're exploring, you need to take a look at it in advance and see if it's an option now, what the pricing is now, so we can kind of figure this thing out. Now, one of the things that I always want to do is take a look at the numbers, show me the math. All right, so if I were to invest $5,000 a year, I start at age 45. By the time I hit age 70, I'll probably have around $316,000 of money in that pool of money that I set aside for my care. That's assuming a 7% rate of return. It's not a crazy number. I think it's a reasonable conversation to have. If I save to 80 and I don't have a long-term care situation there, I end up with almost $700,000. So that's a good thing. I would have enough money to basically pay for that care, and I would be fine for even if I had a husband and a wife, it would be relatively good. Now, if I was looking at if I just had insurance premiums, what would those insurance premiums cost me? Well, starting at age 45 going up to 70, I would have put out around $42,000, and if I kept that policy up to age 80, I would have paid around $60,000 over the course of that period of time to have that benefit that's available to me. But one of the most important questions you have to say is that what happens if you don't have that much time? What if you have some kind of condition that pops up in advance that causes you to need care faster? It might be a car accident, it might be a medical condition, and so forth. So in a situation where I only have 11 years, I ended up with not enough money to make sure that this thing is going to happen. So again, my point would be as simple as that take a look at the various options that are available to you. If you have a lot of pensions, if you have a lot of guaranteed income from real estate that's coming in on a systematic basis, what I might say is that I don't think the cost of the care is going to be as important because we have that income coming in, but the coordination of that care is going to be very important, especially if your kids are not in this area. So again, one of the things I think it's important for everybody to do is to sit down with your family and have a conversation and just say, listen, as we are getting older, we are reasonably going to need some level of care. Gretchen, could you go to that next slide for me? Yeah, we're going to reasonably need some level of care. And having a conversation to see, first of all, is it an option to have your family help you out? If they're not in this area, so if I take a look at my personal family, I'm the closest person to my mom. She's down in Manasquan, an hour away. So with her, two issues I had is I wanted to be able to coordinate the care for her if I needed to, have a case manager, have all that stuff set up with a phone call. She's a nurse. She wants to pick and choose her own people. The policy she had allowed her to do that while staying in the home. But it starts with having a conversation of saying that as we age, this is how we want to see this thing. And sometimes we could be in that meeting with you, with your family, just to kind of talk about some of these issues because we've done this before. The second thing is timing is everything. You will never make a good decision in a crisis mode, all right? A lot of times people wait until that situation implodes, and then all of a sudden you got to figure out how to get this done in the shortest period of time. And I guarantee you that decision is going to be a bad one. To the extent that we could say, all right, if we need care, these are the types of things that I want to start working on first. These are plan Bs. And if we do need facility-based care, here are the areas I like to go to. At least we have an idea in advance of what it is we're trying to do and how we're going to make this thing work for you. And you got to be proactive. Again, if you just wait on this stuff and you don't kind of think about it, more likely than not, you're not going to be responsible for the quality of care that you're receiving. You're not going to be coordinating that. You're not going to have anything to do with how we do it. Basically, you're going to have your children or your spouse dictating how this thing is going to play out. And I would just tell you that, especially with your life and your health care, you want to make sure that you're as proactive as possible on this. And again, I think that's really important to do. So again, the best practices that people always say is, again, this is part of an overall financial plan. You know, this is something reasonable. We were going through the numbers before. It's about a 70% shot. If you live past 65, you may need the care. So taking a look at, if we do need the care, how do we want to provide it? Having that conversation with your family, I think, is very important to understand what your options are. Best time to start planning is now. Again, write this stuff down. Say, I want to have a meeting with my family. Maybe it's even at Thanksgiving when everybody's coming back. Take a half hour and just have a good conversation talking about reasonably what's going to happen to you at some point in your life. Also, the best time to look at policies is if you're in your 50s. It doesn't mean if you're in your 60s you can't do this, but I would just say, let's run the numbers. Let's see what makes sense. If we self-fund it, what does it look like? Do you have pensions that guarantee the income? So maybe it's really just a matter of coordinating the care. We could help design a plan based on how much income you have coming in and what do we need in terms of protection. And if you don't qualify, again, there's other options we need to look at, but we need to look at those things now. So the basics of any financial plan is, number one, live below your means. If you make X amount of dollars, spend less than that. And whatever you save, invest on a systematic basis. It gives you options and flexibility in the future. You get a raise, take some of that money off the table, put some of it in your pocket, have some fun with it, but put a lot of it away. Just save on a regular basis. Your cost shouldn't increase every time you get an increase in a paycheck. Automate your system. I don't write a check for anything. I set it up that automatically my bank account sends out money to wherever it needs to go out, and all I have to do is take a look at it on a systematic basis to see, do I want to make any modifications. Estate planning, especially medical power of attorney. This is what we're talking about here. Who is going to help me provide my care? Who's got your medical power of attorney? Who is your living will? Who is all those documents? Are they good? A lot of what I see is not really too good. And finally, talking to your advisor and just having some good conversations about this and just kind of getting out in front of this stuff. I think it's incredibly important to do. Now, again, thank you very much for your time today. I think now we're going to have some question and answers.
Sure. So we had a couple questions that came in during the presentation, and obviously if anybody has questions now, you can type them into the question panel on the side, and we'll try to get to all of them. So one person asked, what level of assets do you need to have that would make long-term care insurance not a financial, or it wouldn't necessarily make sense to get long-term insurance?
I think I'll take that one. Again, there's not a number. It's kind of a ratio, you know, meaning if it costs you a certain amount of money to live each month, let's just say that number is $10,000. The question is, how much of your income is coming in on a systematic basis? Again, when Greg was talking about this before, when you need long-term care, if it's facility-based care, you're probably talking $10,000 to $12,000 a month or more. home-based care as well. We need to take a look at the consistency of the income being generated by those assets. So if you have pension plans, if you have real estate holdings that generate consistent income, then I think you're in a pretty good position from a cost standpoint. But the second component of that is also taking a look at how does care get coordinated, especially if your kids are not in this area. So there's not really a number that I could give you. I think it's a matter of the consistency of the income and the coordination of care. So I think those are some good points that we need to kind of take a look at.
Okay. One of the other questions was, what's the process for qualifying for long-term care insurance? Is it similar to life insurance, or maybe Greg, you can kind of explain what people go through in order to, I guess, get approved for a policy?
Okay, that's a great question, and it all depends on what type of product you're purchasing. A traditional long-term care is they're underwriting for morbidity. All right, the inability to do your activities of living. So what they're going to do is complete an application. They will go and secure your medical records from the insurance company and do what is known as a phone history interview, where somebody will call you and answer some questions, basically to reiterate what you stated on your application. If you're looking at one of these linked hybrid products, it's very possible that it's just a detailed phone interview. But if you have not had a medical exam to include blood and urine over the last 18 to 24 months, the carrier does reserve the right to ask for a medical exam. The underwriting is not overly detailed. The insurance company just wants to make sure that they're doing a prudent job in making sure that you're a good prospect for long-term care.
Okay. Somebody wrote in, because I know during the presentation we talked about how there's a significant drop in the number of insurance providers that actually provide or offer long-term care insurance. So if there were 100 insurers before and now there's only about 10 or 12, what would happen if somebody currently has a policy with an insurer that goes under before they actually need to get a long-term care benefit?
Okay, that's a great question. And though the insurance company is no longer writing new business, called a closed book of business, that company is still there honoring claims. And big companies today, such as Travelers, CNA, Unum, Prudential, MetLife, John Hancock, these carriers are still in existence and they're honoring claims. If in fact a company happens to go under, and the chance of that is happening is very, very, very slim. We saw Mutual Benefit back in the 80s go under. Another carrier would come in and purchase its book of business in that scenario. So I have no reservations whatsoever of a company who's exiting the business. They will stay intact to honor the claims. Jerry, you want to hit on a little more of that, or?
Well, again, I would just say it's something that I'm very concerned about, because I can't think of a worse position to have, to be the vice president of long-term care for a company that's not focusing on this anymore. My concern is that if a company's not marketing new business in this area, that they're not focusing their best resources in that area. So again, part of the process, and one of the reasons why I have Greg on here today too, is that I think there needs to be a pretty good process of evaluating the company's commitment to being in long-term care, and making sure that this company is going to be focused on this business for a long period of time. Again, I don't want to be with a company that really is just waiting for everybody on their book of business to die. I want somebody who's really focused on this, and they're going to have very good programs, case managers, all that different types of things, to make sure that if we have a claim, that claim is going to be honored and it's going to be done in a way that I feel comfortable with.
Very true.
Great. So I want to be cognizant of time. There's one last one that I do think was a good question. So if you have long-term care insurance, does the policy holder have the ability to choose when they would go into an assisted living facility, or does the insurance company determine that when that happens? You
own your own traditional long-term care policy or whatever hybrid type of policy. You're in the driver's seat. It is you and your family member that decides where the services are coming from. Obviously, you want to stay in the comfort of your own home as long as you can. But when your health deteriorates to the point that you need more advanced care, that decision's taken away from you. It's your family will then decide what environment you will go to. The insurance company has no right to dictate to you where, when, for how long you're going to need the services. It's the benefits of the policy, and you are the owner of your contract, so you individually determine where your services are coming from and when you need to go in.
Okay. Thanks, Greg, and thanks, Jerry. I know there are several more questions that came in, but as I said, I want to be cognizant. If your question was not answered, we will follow up with you specifically to make sure we address the specifics of what you had questions about. So, and we also realized that there was a lot of information contained in this presentation. Please feel free to download a copy of the presentation, which is available. And as I said before, we'll also forward a link of this recorded webinar as well as a copy of the presentation to all the registrants. And obviously, if you have any additional questions, feel free to reach out to our office. And so thank you again, everyone, for joining us. Stay safe and enjoy the rest of the day.
Thank you very much, everybody. Appreciate your time.
Have a great day. Be safe.